China is uninvestable, in my opinion, at this point. I've never invested in China long or short. Why is that? I don't trust the data. I don't trust the relationship between the United States and China anymore. I think that investments in China could be confiscated. I think there's a risk of that, end quote. Obviously, with a significant percentage of the Daily Journal's marketable securities invested in BYD and Alibaba, you feel differently. Please explain why you are right.
Well, of course, only the future knows who's going to be right. But China is a big modern nation. It's got this huge population and this huge modernity that's come in the last 30 years. And we invested some money in China because we could get more value in terms of the strength of the enterprise and the price of the security than we could get in the United States. Other people, including Sequoia, the leading venture capital firm in the United States, have made the same decision we have. But I'm sympathetic to Gunlock. If he's nervous, he doesn't have to join us. Different folks have different opinions. I feel about Russia the way he feels about China. I don't invest in Russia, so I can't criticize Gunlock's point of view. It's just I reach a different conclusion.
This question comes in from Bill Roberts, and he says, Charlie, you and Warren have been making concentrated investments since the 1950s. Many of these investments have led to gains, but even more impressively, none of them have led to significant losses. As far as I can tell, neither one of you has lost more than a few percentage points of equity on any single investment. Daily Journal has recently bet a large amount of its capital on Alibaba and foreign traded stock. It's also taken on an additional $40 million in margin debt to make these investments. What makes you so sure that these investments won't lead to a substantial impairment of Daily Journal's equity capital, which would impact the company's ability to reinvest the resources needed to develop the company's software operating business?
Well, of course, if you invest in marketable securities, you have the risk that they'll go down and you'll lose money instead of make it. But if you hold a depreciating currency, that's losing purchasing power. On balance, we prefer the risks we have to those we're avoiding, and we don't mind a tiny little bit of margin debt.
I got lots and lots of questions on Alibaba. That was the one question that I received more than any other, so I'll dig a little deeper through some of these. Someone named Vishal Patel from Toronto wrote in and said that as a Daily Journal owner, do we own local shares of Alibaba? Does that actually give us legal ownership of that business, or do we have a variable interest, and is that the same? Net, what do we own? And I did get a series of questions related to that same sort of thought.
When you buy Alibaba, you do get a sort of a derivative, but assuming there's a reasonable honor among civilized nations, that risk doesn't seem all that big to me.
I got a lot of questions just about the investing in China risks, and I'll ask this one from Ravi Mehta. Interested in your take on China and Chinese stock exposure for the long term. He says it's becoming quite evident that Chinese companies could be banned from doing business in the Western world, or maybe some of the Eastern countries too, because of the number of the following reasons. 1, the security threat issues. 2, the potential conflict over Taiwan. 3, inability to meet Western accounting standards. And number 4, human rights issues. Considering all of the risks mentioned above, why would anyone as smart as Munger or Buffett consider investing in China or any of the Chinese companies?
Well, we did it for a very simple reason. We got more strength per dollar invested. In China, the companies we invest in are stronger relative to their competition and priced lower. That's why we're in China.
Hey, what's going on, everyone? So now we're going to talk a little bit more about the technicalities rather than the fundamentals. And as we all just heard, Charlie Munger is extremely bullish on Alibaba. In fact, let's just go ahead, and since we are talking about price action, I want to take a look at the option chain because there are some popular option contracts, but to understand the sentiment around Alibaba, which has been a little bit bearish in the near term, right? We just saw that Alibaba went from around $117 per share, and it is now trading at $107.57. So in the past 2 days, it has been down almost 7%, with a decline of $7.43. So if we go over to the popular option contracts, we can see that there is a lot of volatility that is probably going to be endured by this one stock. And I'm not sure if this is the same for other equities as well. So let me just go ahead and check out Tesla real quick, and we see this same exact pattern. Except Tesla does have more people trading around it, whereas Alibaba doesn't have as many contracts being traded throughout time. But that doesn't really matter because the trend is still there, right? People are going to be making these equities very volatile. And it's not just people, right? It's also the hedge funds, the banks, because they are the ones that have a lot of control over the share prices, right? So let's go ahead and talk about, let's say May 20th. Let's start off with the $80 to $100 strike price. We could see a difference in the premium. And sometimes this can hint what may happen in the future, the sentiment really. So the premium, $903,800 worth of call options versus $1.2 million worth of put options. And the ratio is a 42% to a 58% difference. So based on this alone, the sentiment is more bearish for the end of May. However, if we go to the $105 to $125 strike price, we can see this option chain is far more bullish. 84% to a 16% difference. And in this chain, the bulls obviously have a higher ratio. So $8.3 million going into call options versus $1.6 million going into put options. And so this also tells us that the sentiment is kind of uncertain, right? Because we have two very important option chains, $80 to $100, and then we also have a little bit farther out the $105 to $125. Now, I will say this, however, we do not know if these call options are being bought or being sold. Same as we do not know that whether these put options are being bought or sold. Hopefully that makes sense because there is a drastic difference in what those two actually mean. If you are selling a call option, essentially you are bearish on the equity. However, if you're buying a call option, then yes, you are bullish. Same thing with puts. If you are buying a put option, you are bearish. You're betting that the price is probably going to go down. However, if you are selling a put option, that actually means that you are bullish. You want that equity. You want at least 100 shares. Same thing over here. The 80 to 100 strike price again, we could say that same thesis or that same idea for these put options, which have a 58% ratio. We don't know if they're selling the puts, same as we don't know if they're buying. That was one option chain that I want to talk about at the end of May. And then I also wanted to talk about September 16th because September is generally known for being a bearish month. And historically, a lot of equities tend to fall during this month. And what do we see over here, everyone? The 80 to $100 strike price has a $98,000 worth going into call options versus $8.5 million going into put options. Now remember, we are only trying to understand these numbers to get an idea of where the sentiment is going to go in the future. No guarantee, however, it's interesting to see what the trend is already showing. And we can see that this trend for this option chain is more so bearish as we have a 1% to a 99% difference in ratio. So that is a significant difference. However, this is not just with AliBaba. Let's go ahead and actually talk about the S&P 500 because I want to see if this trend is the same. And I'm pretty sure that it is because September, again, is known for being a bearish month, so I would not worry. And it's also very early. We have not even gotten to half of the year. So many people have already started piling their put options, and we could see just from over here the $380 to $409 strike price on September 16th, the premium is a 7% versus a 93% difference. So that's the ratio. And take a look at this, $579,200 going into call options versus 7.9, basically $8 million already going into put options. I wouldn't worry too much about the option chain because based on what we've heard, Charlie Munger has been bullish on AliBaba, and if he's bullish on AliBaba, I think that served itself well. So I'm just gonna leave it at that. If you guys have any questions, let me know in the comment section below, and thanks again for watching. I'll see you guys in the next video.